Hello, and welcome back to our channel. Today, we'll speak about Tether and how it's putting the crypto industry in jeopardy. In July, Treasury Secretary Janet Yellen arranged a meeting with the Federal Reserve Chairman, the head of the Securities and Exchange Commission, and 6 other key officials to discuss Tether. They couldn't have missed the absurdity of the situation. Inflation was surging, a COVID increase threatened the economy's recovery, and Yellen wanted to chat about a digital currency founded by a former child star who missed a penalty shot in the Mighty Ducks. Tether, on the other hand, has grown to such size that it has put the US financial system in jeopardy. Tether is what's known as a stablecoin in the financial world. Stable, since Tether is expected to be backed by $1. However, it is more like a bank. Tether Holdings Limited, the company behind the currency, takes dollars from customers who want to swap cryptocurrency for tethers and credits their digital wallets with the same amount of tethers. Tethers may be transferred to cryptocurrency exchanges and used to bet on the price of Bitcoin, Ether, or any of the hundreds of other currencies available. It's never been clear how Tether is supported, or even whether it is backed at all. For years, a vociferous group of critics has alleged that, despite the company's claims, Tether Holdings has the financial resources to maintain a 1-to-1 exchange rate, essentially rendering its coin a forgery. Tether, on the other hand, appeared to be little more than a curiosity in the crypto world, where joke currencies with photographs of dogs may be worth billions of dollars and scammers make millions on a monthly basis with ridiculous sounding schemes. Then, earlier this year, Tether Holdings began issuing a large number of digital currency. Tethers have now reached 69 billion in circulation, with 48 billion issued this year. That implies the corporation allegedly possesses $69 billion in actual money to back the coins, a sum that would put it among the top 50 banks in the United States if it were a US bank rather than an unregulated offshore firm. The quantity of Tether's alleged dollar assets in the eyes of authorities is so large that even supposing the dollars are real, it would be risky. If a large number of traders demand their money back at once, the corporation may be forced to liquidate its assets at a loss, triggering a run on the not bank. Credit markets might fail, causing losses to flow into the regulated financial system. Tether's Ponzi scheme, if the trolls are correct, would be greater than Bernie Madoff's. On the company's website, a green hexagon with a white T depicts the Tether currency, which promises digital money for a digital era. The emblem isn't much, but it's perhaps the most ordinary aspect about Tether Holdings, which is bizarre in nearly every manner. LinkedIn lists only a dozen employees, a small amount for a corporation with $69 billion in assets under management. Tether's website also boasts of a deal with New York's Attorney General, although the announcement of that settlement made it sound like the corporation had been up to some nefarious deeds. The Attorney General, Letitia James, said in a statement that Tether Holdings was run by unlicensed and unregulated persons and companies operating in the darkest depths of the financial system. Tether has the reserves to back its coins, according to a letter from an accounting company, and a pie chart shows that nearly $30 billion of its dollar assets are placed in commercial paper, which are short-term loans to firms. That would put Tether on par with Charles Schwab and Vanguard Group as the 7th largest holder of such debt. To verify this claim, certain Wall Street dealers were polled to determine whether they had seen Tether acquire anything. No one had done so before. Deborah Cunningham, Chief Investment Officer of Global Money Markets at Federated Hermes, described the market as a tiny market with a lot of individuals that know each other. Stuart Hoegner, Tether's lawyer, stated that Vandervelde and Devasini desire to stay out of the spotlight. Tether's detractors, he said, are jihadists bent on destroying the corporation. For preserving and investing the reserves, we maintain a clear, comprehensive, and sophisticated risk management structure, he said, adding that no client has ever sought for money back and been denied. It was difficult to imagine that individuals had transferred $69 billion in actual money to a firm that appeared to be made entirely of red flags. Every day, though, traders purchase and sell Tether currencies on cryptocurrency exchanges as if they were dollars. Tether trades for more than $100 billion per day. Almost 2 centuries after the money scarcity of the 1800s, Brock Pierce, a former child actor who portrayed Emilio Estevez's role in the Mighty Ducks flicks, was confronted with the same temptation. Pierce claimed he and programmer Craig Sellers came up with the idea for a stablecoin in 2013. The issue was that Tether, like other cryptocurrencies, flouted almost every financial requirement. Banks maintain track of who has an account and where they transfer the money, allowing law authorities to follow unlawful activities. Tether Holdings verifies the identification of individuals who purchase coins directly from the corporation, but once the money is in circulation, it may be transferred anonymously by passing a code. Without anybody knowing, a drug lord may store millions of tethers in a digital wallet and deliver them to a terrorist. Pearson Collins gave up on Tether after roughly a year in 2015 because of this possibility. However, the exchange CEO, Potter, was less concerned about its legality since, as he stated in a 2019 podcast, his exchange was already operating in a gray area. Tether has yet to reveal where it stores its funds. Deltec Bank and Trust in the Bahamas was the only financial institution prepared to claim it is actively cooperating with the firm. The bank's holdings have fallen to only a few $1 billion after it had formerly performed investment banking throughout Latin America. Chalopin made a significant investment and eventually became the largest stakeholder. In movie, Bohemian banks are frequently characterized as havens for money launderers, but Chalopin claims Deltec's competitive advantage is client service, not secrecy. He made the decision to look for clients in new fields of industry, such as biotech, gene editing, and artificial intelligence, that were too tiny for larger banks to pay attention to. Cryptocurrencies were another topic. Crypto was like, don't touch, it's highly hazardous, and he agreed. Actually, if you dig a little further, you'll find it isn't. He stated he was referred to Devasini by a customer who had made a fortune from Bitcoin in 2017. Chalopin says he spent months researching Tether before signing on as a client in November 2018. He was startled that skeptics continued to claim that Tether's currency was not backed by real money. He stated that the most important factor was that money did not exist at the time. We already knew there was money, it had been sitting in this location. Chalopin, on the other hand, chuckled when asked whether he knew for sure that Tether's assets were now entirely protected. He recognized that the question was challenging. For Tether, he simply had cash and incredibly low-risk bonds. However, the corporation had recently begun to use other banks to manage its funds. Only about a quarter of it, almost $15 billion, is still held by Deltec. He stated, "I can't comment on what I don't know, only what is with us under my control." Tether Holdings reserves, according to a document presenting a full description of them, include billions of dollars in short-term loans to significant Chinese corporations, which money market funds shun. And that was before China Evergrande Group, one of the country's top property developers, began to fail. Tether had issued billion-dollar loans to other cryptocurrency startups using Bitcoin as collateral. Celsius Network Limited, a huge quasi-bank for cryptocurrency investors, is one of them, according to its creator, Alex Machinsky. He claims to pay a 5 to 6% interest rate on loans totaling around 1 billion Tether. Tether has denied having any Evergrande debt, but Tether's lawyer Hogner has refused to clarify if Tether holds any other Chinese commercial paper. The Treasury Department officials met in July to explore regulating Tether like a bank, which would require Devasini to reveal where the money is or potentially undercut it by establishing an official US stablecoin. The scenario is reminiscent of the days of rogue banking. Customers in those not banks weren't scumbags, it was the only money they could get their hands on. But all changed when President Abraham Lincoln, in the early days of the Civil War, began producing government paper money and imposed a prohibitively high levy on all other forms of cash. The Wildcat notes, which once fueled the economies of frontier communities, have fallen out of favor, some people handing them to kids to play with. They were used as wallpaper in rural regions. That's it for today's video. Tell us what you think about the situation that the crypto market can be in, and give us your suggestions in the comments section down below. Till then, goodbye.